geopolitical events haven't really triggered any more chain events and consequences, also in financial markets. So that's positive. So I think that, but one cannot be complacent. The acceleration of geopolitical events coupled with potential escalations on the macroeconomic front, tariff, protectionism, it's definitely something that has to be watched. On the other end, we still see consumers and the economy quite resilient despite all these challenges. So, but we have to watch carefully those developments and not to be complacent.
How do you see the outlook for the global economy next year? It feels as though you're going to get like pockets of growth. The U.S. perhaps one of them, Europe less so. How do you square it all together?
Well, if you look at the fact that rates may come off, inflation seems to be under control for the time being, and potential deregulation in the U.S. Fostering M&A activity, that could be beneficial for the economy and for markets. On the other end, as we mentioned, tariff may create some potential inflationary consequences. So. It's still very uncertain. I do believe that next year we're going to still continue to see a lot of volatility in financial markets, and therefore one has to be very diversified and look at opportunities to deploy cash in a diversified manner.
What would you say the risk-taking appetite is for UBS clients right now?
Well, risk appetite is balanced. I do believe that we see for clients opportunities to redeploy cash as we expect rates to come off. But I would say that not a lot of risk appetite in this environment. Balanced and diversification is key.
You mentioned earlier perhaps the deregulation drive that's going to be spearheaded out of the U.S. with the advent of the Trump administration. What knock-on effect is it going to have on the European banking industry, on the Swiss banking industry, if you have this deregulatory drive or less onerous regulation coming out of the U.S.? Again, it comes back to my original question about competitiveness.
Well, I think it's difficult to see. I think that it's a fact that Europe and, in general, including Switzerland, are quite slow to react to what's going on in the U.S. I think that in such an environment, I don't really expect a lot of deregulation, but probably less regulation and more an ability to go through M&A, and that could probably change a little bit the picture, even outside the U.S.
Are you expecting deal making to pick up next year then?
I do expect some M&A to materialize. Also in Europe, we do see consolidation happening more at domestic level, but it could also be that some of this will translate into cross-border.
Yeah, well, I was going to ask you about that. In the UniCredit, obviously, have been quite active cross-border. Domestically, do you see this as a positive development for the European banking industry, that some form of consolidation has started to happen?
In general, yes, but I mean, at the end of the day, in order to really foster consolidation in Europe, you need to have a banking union. You need to have a more solid approach to consolidation. So at this stage, it's a kind of domestic consolidation, but of course, it's far from being a good model that can expand it to more realities in the banking landscape in Europe.
Yeah, and just a final question for you, since we're going to end on Europe and this consolidation push that has been happening. Many people have been talking about the Draghi competitiveness report and what Europe needs to do to sort of catch up in terms of productivity. Do you think that Europe has the right focus now to do what it takes to get the economy back to speed again?
Unfortunately, I don't think there is the right focus at this stage. It seems to me that Europe is much more preoccupied at country level to address their own political worries, and there is less focus on the European project. So. Yeah. I'm afraid, it looks like a very good piece of work that has very good ideas, but is unlikely to be implemented in the short term.
Difficult to implement as ever.